All right, good morning, everybody. This is our second time using the YouTube stream, just testing this out. So I'm going to give it a couple of minutes to let everyone come in. And then I'll start the recording, but I do have it up. Awesome. Okay. Good morning to you, Nicasio. Watching at work, have a meeting at 10. Understood. Understood. Good morning, Clint. New freezer coming any minute. Gotta love a 7 a.m. delivery window. Good morning, Press. Good morning, Sandy. Okay, love it. Thank you guys for weighing in. Give me your thoughts so far on just popping where he just takes you to YouTube and you're watching there. Good, bad, indifferent? Do you have a preference? If so, what is it? Stephen D., good morning to you, sir. Good to see you. Nice, balmy 21 degrees here in Eagle Mountain, Utah. My son is making the drive from Billings, Montana to our house for Thanksgiving today. Cold, but hopefully no moisture. The YouTube is good. No preference. Thank you, Nicasio. Appreciate that, sir. It's fine. No preference. Okay. Good. Good to hear. Good to hear. I think you could, Press. I think that's just like a little reminder step. I think if it's yes, not I think it's streaming. Like I go in and I start the stream and it's connected and you would see my screen and hear me yammering. So you could just pop into the YouTube live and have that saved at those times. It's just a reminder. Love it. Okay. Okay. Stephen, reevaluated posture after the meeting, updated 675. 675 is strong. I don't know if you were there. We went back and looked at when the market kind of popped out last year around this time, and we weren't this strong, not this early. Yeah, so I agree. There's some. It's yeah, looking good. Okay, we'll give it. Oh no, we're good. Let's get started. Recording going. Officially, good morning, everyone. Welcome to the Market Watch Group weekly opening bell. If you happen to catch this recording, we're just testing a few things. These last couple of sessions, we didn't go into the circle stream. There's been a couple of issues that have come my way. And I just thought, you know what? I need to make sure that I really understand all my capacities in this new platform that we have. And so we're going to just run this a little bit, see what we think so far. Everyone's like, yeah, no problem. Just popping into the YouTube because we're using that anyway. So why not? Okay. My name is Scott. I'll be your host. It's a little after 9:15 a.m. Eastern time. As always, please remember that this is for education and illustrative purposes only. We're not brokers. We're not advisors. We don't give advice or recommendations. We're just simply a community of like-minded traders / best friends who meet to wax philosophically about all things market related, specifically the derivatives market. That's it. It's just too long for a name, so we had to come up with something shorter. What do we do today? Let's look at the futures in the news. Let's review the calendar, talk about our posture. What's the connection? We just met. I just saw you guys, not 20 hours ago? Nothing's changed. Everything's changed. Everything has changed. Now the market's opening. Now it's no longer market posture. Now it's trading posture. Trading posture. Now it's time to pull the trigger, maybe. I don't know. That's what we're talking about. Do we still feel good about pulling the trigger? We said yes before, but now as we come and we talk about opening futures, if the opening futures were like dire, of course we're not going to be like, oh, well, our posture was bullish, so let's put on bullish trades. No, we're going to think, okay, does this translate? Does this open doors? Right? Futures look phenomenal. Press, to your point. Good morning, Sam. Good to see you. My sound level is lower on YouTube. Okay, so let me ask this for a second, Clint. You brought up a sticky point. My children and wife tell me that I am a loud talker. They're like, oh my God, are you shouting in people's ears when you're on session with them? And I'm like, I don't think so. Like, maybe. And so let's have a quick bout of honesty. Am I a loud talker? Do I like shout at you guys sometimes? I get excited. I have like some enthusiasm and I'm like, I love trading. Anyways, I'm just curious, but I hope it's not too low. Good morning, Ray. Good to see you. Bob Walker. YouTube is good for you. Okay. Love it. Anyways, tell me if I need to speak a little louder or a little softer and I'll try to accommodate. Let's talk about the opening range. Let's talk about our opportunity list because it was still strong. I think we had like 15, 17 candidates, something along those lines. Let's get into it. I had the NQs up. The NASDAQ futures. They're up 0.9%. You know what? Let's just go to you. We'll do our normal. Let's go into Yahoo Finance. I think I didn't reload everything, though. Let me just get some things going here. Okay. Fed favored PCE inflation seen as stalling in the week ahead. But yesterday, there was a little bit of a chat, a little discussion. The audio is lower, but doesn't seem like I'm shouting. Okay, fair enough. Good. Oh, Sam had to turn it up. Thank you, Sam. I'm going to note that when I counter my children and tell them it's not only loud, but someone had to turn it up. Yesterday, press asked about or made a comment about, I can't remember which it was, about some of the cabinet picks, incoming administrative cabinet picks, and possibly influencing. And I said, I feel like it's mostly been adjusted already, and this is more just normal things. But actually, there are people attributing this morning's to the most recent pick. So possibly so. Possibly continuing right along the same thought process when the after the election. Okay. MicroStrategy purchases another $5 billion in Bitcoin. $5 billion at 100,000 of Bitcoin. That's crazy. What else? Anything? It's hard. I find that it's harder to skim articles in this format. Anyone else? I don't know. There it is. Besant says tax cuts are a priority. Ooh, I don't know. Okay, we'll see about that. But futures, 0.76 on the S&P, 0.9 on the Dow, 0.9 on the NASDAQ, 1.3 on the Russell. Oil dropped precipitously. It was sitting and then just, boom, 2%. Gold dropping. Now, here's the thing about gold dropping 2%. It just made a huge run. So at this point, seeing a pullback would be expected as just a normal ebb and flow of market action. But if you found renewed bullish enthusiasm from the recent bullish surge, then this would be the start of the next setup. So for us, we said, hey, I like gold again after that last run. It had just dropped almost 10%. We'll see it in the chart. Okay. What else is happening pre-market? 726. I was just peeking at some of the trades. If you got the Palantir on, then well done. If you didn't get the Palantir trade on, it's moving pre-market. Palantir's up, I think, about 4% pre-market. So, anyways, what about Palantir? If you missed it, on Friday, we built the alert live. Like we went through and built the trade, and then I posted it, and the email came out last. Oh, other thing. Trade alert texts, that's coming out. You're going to have to opt in. I'll figure out how to post that to make it as easy as possible so that you opt in. It doesn't let us send you texts without you opting in. So how can you see pre-market on an individual stock? Press wants to know. My answer, like usual, magic. Now, if you come in here, I'm going to get my drawings, and you come up here, this bid ask is showing you the pre-market bid ask. So we closed at 64.35 on Friday, and this morning we're set to open about here. I would say 67. Does that look like 67? That's the yeah. So we're gonna gap up to that point right there. Yeah, fast, right? So there you go. We can see a few others. Fastenal is another one I believe a few of us have on. Fastenal. Yeah, see, this one is actually not helpful. The bid is below at 81.97. The ask is above at 84.15. That's actually not giving us any pre-market information that's useful. Let's see about KKR. KKR, it's pretty wide, so it's somewhat useful, and it's about $1 higher, so I would expect KKR to open higher as well. Show extended hours. But I don't like it to show on my chart, because then I like it to aggregate. It's a funny thing. You have to be careful with it. I don't know, Miguel. Do you go back and forth, or do you keep yours on aggregate? If you show extended hours, it can also change what you see because it aggregates it into the day, and that can actually make it look different. Oh my goodness, my volume is so high. Did you hear how loud that bell was? My goodness. That scared the hell out of me. Market's open, by the way. There's KKR gapped up to 159 and change. But I'll tell you this. What I have found is if there's a technical trick, Miguel is our resource for that on Thinkorswim. You're an engineer by trade. Is that right, Miguel? Anyways. It's good to have him around. We'll keep him. We'll keep him in the club. Let's go through some things now that the market's open. So I'm curious about two things right off the bat. There's the S&P. Woo, that's a good gap. Right to the old high, sitting at that 600 point. And we kind of said, all right, there's a chance that we hit a little friction there at the old high. Why? Because people are like, oh, it's the old high. There's always some of that. So, let's be patient. Let's see what the VIX says. VIX continuing to push down. Okay, we like that. Let's go take a look at Palantir. There's that gap to about 6. You can see a gap to 67 like we thought, but it's pulled back a little already. And it's not like, oh, what should I do? I've got a pretty lucrative target on this. Just barely getting going. So nothing. I'm just going to watch it. I think that we said that we could be on the start of the next bullish run. Like, we're just barely seeing the VIX roll over, meaning institutions are kind of shedding some of their concerns, literally, as they shut down hedges that they've had on. That's the kind of thing that puts influence on the VIX as an indicator. KKR. Ooh, KKR is looking good. Another day. Looking solid. Fastenal. Nope. Fastenal. Still, it's. You can see Fastenal is it's there, but I'd like to see it accelerate to kind of keep up with this. We'll see what happens. We'll give it plenty of space to do so. Cisco. Oh, come on, Cisco. Cisco had a great day Friday. I thought maybe it would have another good day today. Continue with this. It's up, but not nearly as strongly. Yeah. Okay, well, it is what it is. It's a solid start to the day. Couldn't fill PLTR. Yep. Miss kick. Okay. Understood. Got the Cisco trade. That was a good one. That one still has plumbing. You can see it's just barely moving into this zone. At this point, you have the ability to start thinking about how you want to maybe tighten your stop losses as it moves higher. So yeah, those are some good ones. Oh, you know what we should look at? Where's our calendar spread? Calendar spread, just kind of sitting there still, right? We didn't really have to do anything. I would have thought it was a little higher than this. Maybe more like $100 in profits. We'll see what happens during the course of the day. The volatility coming down. I'm just going to keep sitting on it. That's what that trade was for, to just kind of give me something to sit on. Time decay. If it moves up, if it moves up, I'll let it sit. Unless it moves beyond certain points. Early in the trade, now here's the thing. Right now, you're like, oh, look how down that would be. But remember that if the market drops down like this is going to rise because volatility is going to push it up. This trade has an inherent volatility hedge. You can see the Vega. If the market drops, this thing is going to catch a real nice piece of it. So that's one of the reasons why I'm going to keep it on, because it helps create a buffer for me right now as well. Anyone still have that trade on? The SPY calendar spread that came out? Let me know. All right, let's go look at a few things that we said. Well, first and foremost, if you weren't here on Sunday, you missed an amazing session. What else did you miss? I popped up into 7 on my posture. Steven was close, 675. There was a few others. And what we flagged was a couple of things. So last year at this time, November to December, started an amazing market. There's a good number of you who were here, right? So weigh in. That was the best trading we had. We weren't doing alerts back then, but we were talking about a lot of good trades during that window of time. That was December, January, February into March. Big window, lots of bullishness. And when we went back and looked at that, two things came to my attention. Number one, the weakness prior. We got down to a minus 0.5 in October, and then we started to recover. But around this time, we had only gotten to about a 4 point, same thing, very strong push. Boom, we went from a 125 to a 2 to a 325 to a 425. Big push. But at this point in November, we were only a 425. Couple weeks later, we got to a 6, then a 6.5. We didn't touch 7 until February. And this market stayed strong until about early April. Until about early April, right there. That was a big, strong window. A good window. Lots of good trading. As you look at it, does that mean that that's what we're going to get again now? No. But is there cyclical correlations in the market that create these types of patterns and waves that we should definitely pay attention to? Yes. So same thing. What happened? There was a bit of regression in October. We went from a 5.5 here at the end of September, and then we dropped to 5.25, and then to 5, and then to 4.75. The month of October was not like it wasn't terrible, wasn't good. It just sort of flat. As a group, we did pretty well in October. But what I'm pointing out is that it's the same thing. In October, we broke out, but we broke out from a 10% correction last year. This year, we broke out from just a little stall. Then we broke out. And we're breaking out to a stronger point sooner. I think that's important to note, right? I'm pushing chips on the table. That's what I'm saying. Is that I want to. This is when and think about this. We've been saying this for a while. We've been saying, look, we're 5s, we're 4.5s. It's the least we get. That's a good market. You should have chips on the table and look at the alerts. Look at your trades. Things have been better. Why? Because the market's been better. We're not smarter. Market's better. Sam says, I was on Discord the day you were doing the SPY spread. Don't have audio. Couldn't hear the explanation. Sam, that is a time spread. A calendar spread is a time spread. And so the two biggest variables we have would be theta, which is our time decay, and our vega, which is our sensitivity to implied volatility. And so it's a time spread that works well in low implied volatility markets. And when we were looking at our VIX at whatever, 14, 15, right? That's the kind of low I mean, it's like that trade was off the table when the pandemic hit. I didn't do a calendar spread for, I think, 3.5 years or 3 years. The VIX didn't get below 20 after the pandemic for like 3 years. It was like so stubborn coming out. It was crazy. But now here we are again. And so that's a phenomenal trade. I'm going to keep, it's not, we only got one on this time because that's it so far. But I can tell you this, there is a video on calendar spreads in the options course. You can skip right to it. You don't have to go in any order. You can just go straight to time spreads and watch that because it's relevant as long as you have some basis in your options. There's some options basics information in there too for anyone who wants to just get started and start learning some terminologies and things like that, right? So great question. This is a trade that you'll see me put on kind of in a leapfrog fashion in bullish markets at the end of a bullish run. Right? At the end of the bullish run, when the market's kind of pushing its highs, that's when the VIX is at its lowest point. And so it creates this nice opportunity to put a trade on where you think the market's going to pull back and maybe flounder and then go back up. And then and so you'll see we do. Great question. Thank you for asking. I hope that brief description at least gives you some idea of why you have that triangle shape, right? You want it to sit. If it moves, we can adjust it. But if it sits, then we take it off, make money, and do it again another time. Okay, let's go look at our watch list. Let's go. Let me see if I can't make sure I have. Okay. Oh, no, okay, yeah, you saw we were bullish. There's the triangle. The triangle makes more sense now. And let's get to a chart. Apple. Come on, look at Apple. Apple was sideways and it catches a nice pop, and my Cisco trade is just sitting today for some reason. Come on, Cisco. You're better than that. Aflac moving a little bit. Amazon. That could be an entry signal potentially. You see this thing's down here. It's crossing. We're bouncing up off of this. It's 2.25%, but certainly. App 11. See, that's a tough one. That's just overextended. I don't know what I could do anything with that. AXP overextended. Now with some of these financials, you're like, okay, if this is what I get at the end of the day, if it doesn't hold some gains, maybe I take half off and start tightening stops. BAC, we said actually could just be getting going, even though it's coming from a higher spot. So that one has still some room to run, I think. BK, still some room to run, I would say. BX, starting to hit some resistance. Caterpillar, industrials, still moving. Celestica Equity, I don't know what that is, but it just made a higher high, and now it's kind of on a pullback. So to me, this is already flagging now, potentially pulling back. I see a lot of places where this could turn into the next trade. Now that I've watched it go through a cycle, I feel better about trading it, so I'm looking a little bit harder at this one. Options aren't going to be phenomenal. It's only about 2.5 million shares average, but they should be good enough. Chipotle, right? More of the thinking about taking. Okay. Okay. So this one was interesting because you can see you had this and it was like, oh, it's an entry, but it's too big of an entry. And then it hiccuped. Now, if you traded the entry, you would be sitting through the hiccup. But if you didn't, which I didn't, we didn't, is this potentially, can we trade the hiccup? Yes, I'm looking at that thinking, that's potentially enticing right there. Coherent, same kind of a thought process. It pulls back, hits the 50, looking for an entry, and it gives this big old thing, and you're like, nah. Great. Well, maybe it's just going to hiccup from here back to 100. Turn. I'll trade that. Rather than get in here and sit through all that, I'd rather wait. Steven's asking about taking some profits. You guys always know you can always take some, keep some. The take some gives you a little bit more swagger to keep some, right? You don't sweat so much because you already locked in some of that gain. I find it's trading with gratitude, right? Rather than regret. When we sell or trade everything, I find that I come away with regret, right? I sold it all, goes higher. I should have kept some. Or if I hold it and it drops, I kept it all. But if I sell some, then I'm always like, I'm really glad I sold that piece. Gratitude over regret. That's my thought process. It's a psychology thing for me. That's part of why I do the sell half, or not even half. Sell one, keep two if you have 3 contracts. It depends on it, right? It also depends on the number of contracts you might have, right? Where you can break down and be like, hey, I've got 5. I could sell 2, keep 3. Okay. One has to have more than one contract to take some, hold one. Fair enough. Here's what I would say. And I know Glenn is not an out-of-the-money options trader. You guys know, and I mathematically prove it over and over and over and over again, that there is absolutely no disadvantage other than the known disadvantages to trading out of the money options if you trade in a very defined and deliberate way, like we tend to. I personally would rather see you go 5 points out of the money the next time you buy one contract. See how many 5 points out of the money would get you. I bet 3. And buy that instead. It's just one time. It's the Scott experiment. And you buy 3 out of the monies. And you trade it the way we always trade, right? Whenever you hear people talk about out of the money options, yeah, guess what? At expiration, 70% of contracts expire worthless. Well, because all in the money options are getting exercised. Everything out of the money is going to expire, and there's a lot of out of the money options. Are they expiring? I mean, those could have been in the money when they were bought. Just keep that in mind, right? Just because they're out of the money now doesn't mean anything about when they were bought. And it doesn't mean anything to us as a statistic relevant to why we should not trade options that are out of the money. The fact is, if you're in an option at expiration and you lost money, the mistake you made was not the option that you bought. I promise you that. And you can bring it to the group, and I'll show you why that's the case. It wasn't the option you bought. It was the trade you managed. Yeah? If you end up at expiration in a trade that's wrong, and you're like, oh, what happened? That's mismanagement. So, what do you think, Steven? Next time, buy 3? 5, whatever it is, whatever strike where you would buy 1, you go like 5 points out of the money to the next core round number, 5, 10, 15, right? And you buy that out of the money option. Make sure it's got good liquidity. It will. And you buy however many you would have bought with the one contract, you buy that many with the cheaper out of the money option. And we'll have a conversation about how it goes, if you're willing to do that. Or buy the one you normally do and paper trade, and then have a race, a contest, and see how that goes. Great way to learn. That's how I used to play golf out here in Utah, because no one used to play 15 years ago, so I could just like hit the ball and then hit another one. And I'd play 2 balls all the way in. Not like my best ball, just play them both all the way. No one was behind me. All right, let's get to the rest of this watch list before we run out of time. Big move on the Dow today, up 1%. Fastenal, catching some of it, not as much as I would like. FI, running out. There's some of them that I would absolutely. Steven's question, should I take some? If I would be thinking, yeah, you know what? I think I'm going to dial back a little bit. I think I'm going to take one or whatever. Keep some, tighten the stop. You can always just tighten your stop loss, if nothing else. Flex, still strong. Okay. What I'm not seeing today, though, Bitcoin pulling back 3%. I'm not seeing anything screaming setup. You can see Bitcoin and gold both pulling back. But as long as gold makes a higher low, that would be viable as well. General Motors. Oh, man, I'll tell you what. I don't know what I wish I could go back and think, what did I not end up not doing with this one then? Already reached the goal and Peel we haven't even gotten to the stock yet. How did we reach the goal so quickly? Google, maybe. Google, I mean, it's below the 50. I don't love that, actually, to be, yeah. I'm not seeing entries. I'm seeing some stuff to manage. Few things starting to pull back early in the cycle. International paper still going. IWM, good day on the small caps. JCI's trying. If you're in that one, it's got a little bit. KKR's hitting a little bit of resistance here. MasterCard. Okay, I think MasterCard. I don't love that I'm a day behind. If I were to do something like this, it would be putting an initial stop pretty tight right here. 8 points. Can I get 24? Where would that put me? That would put me at 546. That's 3-1. I don't know. That looks like a little too much to ask for. And I would rather, I mean, maybe you could get 2-1 with a trail stop already in place. That'd be worth thinking about. Meta. Oh, Meta. Trying something. We'd like to see Meta or Google come to the party. Microsoft. MicroStrategy with their $5 billion in crypto down 6%. Boy, they really shot the moon there, didn't they? NASDAQ. Netflix. A lot of things are starting to, get a little overextended. So, yeah. Is it time to take some gains? Oh, it reached your initial goal. I think it was around 68, right? Okay. Very nice. PayPal still moving. Roblox, not yet. Reddit. Anyone see something they think looks tradable? I feel like we've got a lot of things overextended. Good to see you, Nicasio. Have a good one. We'll see you soon. Here's SO. SoFi. SPY. Nah, I don't know. I'm not seeing anything other than like we're managing trades that we're in. Right? TJX. How do I judge something being overextended? Okay. So for example, here you can see I'm just kind of crossing. This one has a little bit more. Here we're just popping out of this. That's a couple of days in to what could be something like that, right? Where you can see you have a big white candle. These stochastics are kind of opened up and they're moving higher. That's a momentum push. Versus if I were to look at, I can't remember anything offhand. Here's Netflix. Now you'll see Netflix, we had this move with a little pause, and then we got this, and it's pausing. It's overbought at the top, and this is actually crossing to the downside with a red candle. So not just overextended, but sellers starting to come in, right? And so that's the kind of thing that we'll look at is adding a oscillator. So I have a 7.3 stochastics. 14.5 is common. MACD, RSI is one people will use. These are just technical tools that we can put on that help us to see overbought and oversold conditions. You'll notice I never talk about it first, right? It's the last thing that I'm thinking about. Because here you can see it started from that midpoint and moved up and got to overbought pretty quickly. It could have looked overbought there. So overbought doesn't necessarily mean like, oh, what are we going to do? Because it could keep going higher. But we just want to recognize we're less likely to enter if it's already, because we have to, it's not just, do we think it's going to go higher? If I enter here and I'm like, where am I wrong? Down here. I can't take that much risk because to get 2-1, it needs to go to here. And we can't trade that way. So for us, it's not just do we think it's going higher, but can we get the reward to risk ratio right so that we're getting 3-1 on our money when we're willing to step in. And so that's why overextended versus if I wait for this to pull back, get here, and then start to turn, then from here I can put my risk here and then ask if it can get to here, just like these other moves, and now I'm getting 3-1. Hopefully that makes sense. So it's just about where is it in that cycle of the swing, right? If a swing is 7 to 10 days on average, which if you go count them, you'll be like, oh yeah, 7 to 10. Got it. Great question, Kevin. Appreciate you asking. I hope that makes sense. How far did I get? Did I get to T-Mobile? I think T-Mobile, that was one that I'm like, okay, this is early. So I don't look at this as overextended because this is just barely kind of turning up. It's got some room to go. Here I have this. So I think to myself, hey, this might have this piece left. If that's what I have, I can't trade it from here because that's 1-to-1. But if I get in with a trail stop because it's already, let me see if those Heiken Ashies will play nice. Because it's already, boom, in that spot. See that? I'm already where I could be like moving my stop. If I can if I can do a trail stop immediately, 2-to-1 is acceptable. If I'm putting a stop below recent price action, I want a 3-to-1. That's kind of how I look at my initial reward to risk expectations. If I'm getting in after a pullback on a support bounce, I should get 3-to-1 on that. 2-to-1's not enough there. If it's already moving, and I just got these first Heiken Ashi candles where I could be like, hey, tighten my stop if I was already in it. Now I think, can I get 2-to-1 and then just move my stop every day? Okay. Right? Those are two different types of directional trades. Toast. Whoops. Let's get out of the Heiken Ashi as our starting point. Tesla. Just kind of choppy right now, right? TSM. NVIDIA's better. Palantir's the best for us right now. How am I able to determine 2-to-1 versus 3-to-1 by just looking at it? I mean, I feel like I can eyeball it now after 20 years and building what has to be hundreds of thousands of trades. Like, not that I've taken necessarily, but right, building trades with coaching, and like I feel like this kind of it just shows up. But you just mark it and look at it real fast, and I think you'll start getting that you build your eyeball skills. That's part of what I want to do is like mark, like here's where it is, where am I going to see my stop. Yeah. Took half a fast for a nice gain. I love it. I love it. Should have gotten into Docu. Are you saying you should have, or you did and I should have? Did you tell us and put it on our list and I just didn't put it on? I'm going to put it on now. Did you trade it, Sandy? Beautiful. Round of applause if you did. Okay. DocuSign's on our list. I like DocuSign. It's good stuff. Oh, you should have? Okay, fair enough. Twilio, I think someone took that. Someone mentioned that one. That was a good one coming out of this. We took KKR. I took a couple of financials. Financials is big. You don't have to limit yourself to one financial. I mean, you could have 3 or 4 different financials on in different areas. Credits, regional bank, broker, national bank, insurance, right? Like, don't be, we're a 7. You can have many different, you can have several different at any time. In industrials, Miguel took Builder Supply, BLDR, and Carrier. Twilio, last week. Nice. Yeah, industrials is big. Technology is big. If you're like, oh, I already have one is when what you only have like 1 or 2 is when we're at a neutral market. This is a bullish market. You could definitely have more. So One thing, if you haven't ever done it yet, make sure you go into the resources and download the top 10 trading mistakes and read it. It's a head nodder, right? It's a, oh, yep, I've done that. I do that a lot. I'm doing that right now, kind of a deal, right? Over trading. We haven't talked about that for a while. Over trading. And someone will ask the question, how do I know if I'm over trading? Well, you don't know anything. But what I tell people is this. If you don't know you're not over trading, you probably are. That's a good way to look at it. Is when you look at your risk, is it deliberately set? Or are you like, oh no, I've got X amount on because I'm a 7, because this is this market, because right, and you have the reasons. Here's the thing. Over trading is very relevant to market conditions. If we were in a 2 market, I would say this is a real easy market to overtrade. Very easy to overtrade a sideways market, where it's just like you get caught and then all of a sudden something sweeps and you had too much on and it just wipes out everything. This is not that market, right? This is the kind of market where a trade starts to go against you and you're like, you know what? That one trade's going, I'm going to hold on to it. I'm not going to take that loss. I'm going to sit, even though it's a little worse than I might normally, because it's that kind of market. Because things recover. Because everybody's a genius in a bull market. Biggest gainers today along with PLTR. Love it. Love it, Miguel. UUP, still strong. The VIX still showing increased institutional positive sentiment. They're feeling better and better. VRT, that's moving into a potential setup. We've got some of these things that are moving into the next one of these, right? Where it pull back to 130. That's a great pullback. I'd love to see that. Victoria's Secret still moving higher. Walmart starting to look overextended, right? Why? Because it's 5 days. It's a doji. The stochastics is overbought and starting to pinch, starting to look overextended. If I were in it, I'd be thinking maybe I'd take some, tighten the stop, because it could still go. But would I put a new trade on? No, I couldn't do that now. I can't take something that's starting to look overextended and be like, well, should I get in? And that is why I make mention of that, Kevin. That's almost for me. Like, yeah, you're not even thinking about it, buddy. It's looking overextended. Stay away. That's my self-talk. XPEV. I don't know. It's sitting on the 50. That's a big pullback. It could have one more run. Let's see if it tries to turn around before we make any decisions, right? It flirted with the 50 last time, and then it made a beautiful run up. Let's be patient. Zillow, a lot like DocuSign and other things in that vein. So the problem was a lot of these, I put them on, and I don't trade like early in the watch list. I'm a lot of just like watching, but I think I should have. I think I should have let my posture be like, yeah, trade a little more aggressively with a couple of the newbies, right? Okay. All right. That's it. That's today. What are we doing? Seems like we're booking gains, tightening stops, and thinking about exits, and starting to identify some early pullback candidates that will make up our next watch list more than we're looking to jump into new trades. Are there a couple of things that still have prospect that you're like, hey, you know what? It was a little late in the cycle. I could still do it. Yes, and it is a market that we definitely could make that case if we don't have as much risk on as we'd like. That's how I see it. All right. Happy hour tonight. Let's hang out and have a conversation. I hope to see you there. Other than that, enjoy the rest of your day. As always, happy trading.